Hi guys, welcome to honeystocks.com weekend analysis for the 9th of August 2019. Now, what a hell of a week we've just had in the market. Incredibly volatile. Most of you will probably be used to it, but there'll be some of you out there that are watching this that are, having that holy shit moment, what's going on? But what I'm going to do is, if this is your first time here, what I'm going to do is just walk you through what we've seen in the market, what we can expect to maybe see next week. And as usual, I've got a heap of charts, a heap of stocks that I feel like should be on your radar. This is mega popular. My website explodes whenever I post these. So, just hope you enjoy it. But I think that the first thing to say is this will have maybe around 15 trade ideas for you for next week. But please, as always, pause the video and make sure that you are comfortable with that. Now, just to maybe give myself a little bit of credibility, I am currently working my way towards my chartered status CMT designation, which is obviously a big deal in the world of technical analysis. I know my stuff, and what I will do is just walk you through the charts via my professional grade software, etc. And you can obviously do your own due diligence. But if you are somebody that finds yourself doing that quite a lot in the market, you can maybe stick around for a couple of minutes at the end. We might be able to help you in some way. But I think rather than obviously ramble on, I'll get started. But if you do like it, please do subscribe to our YouTube channel. It would be much appreciated. Now, the charts. Now, this is the chart for the Triple Q tech. Now, a lot of you, obviously, when the market had this substantial drop, I'm not going to sugarcoat it. I'm not going to try and say to you that everybody got out of this unscathed. Absolutely not. But what is important to do is really understand what the key support levels in the market are. With the Triple Q, which is the tech ETF, very, very straightforward. The trend line was already placed there for us, so we're just waiting to see where we get support. You just move in when we get the support. It really is that simple. So that was obviously tech. Now, as you can see, I've got a heap of charts that I'm going to walk through with you. The first up, we've got Microsoft. Now, this is a position that I've taken this week. I very much like the chart, very similar to Triple Q. The chart is almost identical, but clear support level. You wait for the support, you move in, off you go. Now, with this trade, when taking it, you should plan every trade in advance. My target on this trade is around $150, which would represent about 14.5% upside from my initial position. And that is really what I'm looking at here. Now, the next chart I'm going to talk about is StarBucks. Now, this is one of the most beautiful charts you will see all year. This is more beautiful than Mila Kunis, as I say to everybody. I think maybe Shopify is the only other one that can perhaps hold a candle to it. But StarBucks is absolutely moving. This is the weekly chart. Moving to the upside, we've got a little bit of a drop, but we have what looks like found support around $92 now. Just for those of you that are maybe looking to take a position in this one, jump in. I have a philosophy that's based upon optimal entries into the market. I use technical analysis to provide me those optimal entries. That's what I consider to be one of my edges. And for me, I would be looking for this very clear resistance level, which is a logical resistance level also to clear. And then I will perhaps look to move in on StarBucks also. Somebody reached out to me on social media this week and was asking about Intelligent Systems Corp. I don't know who it was. I receive literally hundreds of messages and emails across all my social channels. But absolutely, this is one. Yeah, there's a case to be made here. Looks like a pretty favourable chart pattern that might be developing. I think what you have to be very conscious of is the volume. The volume prevents me from ever considering taking a position in it, but hopefully this chart helps you out. Ball Corp, again, beautiful chart. Incredible chart. It's been a top performer this year, up 80%. Flies under the radar. I have been beating the drum on this one for such a long time now, and absolutely, we can be bullish above $70. It does look like it's starting to motor a little bit. It's also valid. Any pullback entries are absolutely valid as well. But obviously, plan out the trade, plan out the technicals on the trade. There's obviously much more to the chart than what's being presented here. But absolutely, Ball Corp is one that you should absolutely be looking to consider. Good old Stone Co Limited. Now, believe it or not, this is another trade that I taken this week, and I'm not immune. I'm not perfect. My trade here was very valid. Take this breakout. Hopefully, we got a bit of momentum. We just didn't get it. Obviously, the overall market conditions did not help whatsoever here. We got an immediate failed breakout. However, I think that the good thing and I suppose the knowledge that I have is that when you understand what the entry is, you should always have an exit plan, and that's what I suppose technical analysis does. That's what a trading plan does. That's what a rule set does. You never ever move your stop loss away from your initial plan. So for me, it was very, very simple. It was a very good risk to reward proposition being offered. However, it was a quick stop out for a minimal loss, and I'm very, very comfortable with that. So yes, I think with STNE, I think that the break above this level is probably coming. However, I think it makes sense to perhaps wait. I think earnings might be coming up next week also, or maybe the week after. But that's something that you should plan out and obviously factor. Obviously, we've got AYX here again. A couple of my clients are doing incredibly well in this one. This one just keeps moving. It's got legs for days, and it's a beautiful looking chart. I'm not in this game for little $1 or $2 moves. I want to be in it for $20, $50, $100 moves. I'm not a day trader. I have a time horizon that's really weeks to months. So AYX, if you're looking for a good solid long-term trend, maybe you want to try and find an entry into that one. XLNX, again, very, very logical here. There seems to be a bit of a support level that's building here. Obviously, overall market conditions did not help today whatsoever. We've obviously had a bit of a drop in momentum. However, I think if we can get back above this 200 MA, then we should start to see strength to the upside. I think for me, all bets would be off, below this level, and certainly below that level. I think if it moves below $100, I think you just say, okay, thanks very much, XLNX. I'm going to move on to something else. Now, one of my clients, Jeannie, has absolutely crushed this trade. She's been in this for quite some time. And for those of you that are maybe looking for a new position into NOC, NOC is absolutely breaking out at the moment. So how far that goes, that there's a logical expectation that this moves certainly towards 400. What happens there will be up to price and up to the market. But absolutely, I think we've got the breakout. You might want to wait for any kind of pullback, and make sure that this level holds as some kind of support for price. But absolutely, the expectation is that if we get favorable market conditions, because it's not always about your individual stock. A lot of the time, as you can see today, it's really about the overall market, and obviously the last week and the beginning of this week, very, very difficult. So absolutely, just bear that in mind. Nike, or Nike, as you like to call it over in the US. In Scotland, we just call it Nike. Now, with Nike, we have got a potential favourable chart pattern forming. Double bottom. Now, a double bottom is very, very subjective. We can only confirm it as being a double bottom once price breaks above this level. However, what we can do is, a lot of the time, if the technicals are supporting it, we can make the logical conclusion that price is at least going to go back and test those previous highs. Now, if that's the thesis that you have, it's valid. I'm not saying it's definitely going to happen. We could absolutely see price fall away here. But if you are taking the view that there's a potential double bottom developing here, then you could look to take it as a more of a swing style trade and look to maybe take it back to 90. Twilio, again, this is why technical analysis is so good. Sorry, excuse me. So with Twilio, as we can see here, very, very clear support level in place. As we've got this drop in the market, during the week, if you've got an understanding of technical analysis, and if you've already got your charts planned out, mapped out, and you're just, scrolling through your charts on a daily basis, it stands to reason that you're going to pick this one up. Twilio, very, very clear support level. Boom, off you go. Now, the expectation is that, this moves back towards 150. As you can see there, I've already mapped out the risk to reward propositions. I've already mapped out what the percentage gain would be. And yeah, I mean, obviously optimal entry missed at the moment, but this is something to absolutely be aware of in future. L3 Harris Technologies, LHX. Okay. So yeah, sorry, let me just remove this. Now, what we have here is very, very clear breakout in the stock. Now, it's obviously trading at around $211. Now, if you have an understanding of what these numbers are, there's a logical expectation that it starts to move towards the next fib level. Now, that next fib level is, a substantial distance away from price where it currently is. So if you are somebody that likes to trade on technicals, absolutely we can be bullish above $207 here. I wouldn't see any reason why we wouldn't want to be in this trade. The stock itself, I mean, if we look at it over the course of the last 6 months, I mean, that's up 75%. So, absolutely, that's a stock that I think should be on everybody's radar at the moment. Now, Apple, I've had so many messages again about this one. Again, it's not difficult, guys. It's just a case of just, understanding and mapping out. I understand that most of you watching this will not have the same lifestyle that I have. A lot of you will not be able to observe the markets for 3-4 hours a day to build charts for your client group and compile watch lists and build analysis videos, etc. I understand that I'm very unique in my situation, but I think with a stock like Apple, it's very, very easy to at least build a little bit of analysis on it. I mean, this is not a difficult chart to build, by any stretch of the imagination. We're in an uptrend. The uptrend dates back to the beginning of the year. Yes, we had a massive pullback, but a lot of the market had a massive pullback as well. But I think the expectation is, provided these levels hold, provided the market plays ball, that this looks like it might go back to 230. But I think where price currently is now, I think we just have to be bullish above the $200 level. I think if we get a breakdown below this level, that presents a bit of a problem for us, and we might want to reconsider our thesis. But I think with Apple, very, very logical at the moment. The other thing I really wanted to touch on, for those of you that maybe picked up on my social media video the other day, when one area of the market declines, other areas are moving. Now, this is one very, very clear area that I think is often overlooked. because it's no surprise that, over the last 10 days when the stock market is going down, there's other areas of the market that are advancing. You can look to the treasury bonds, you can look at the gold, precious metals, commodities, foreign exchange currencies, etc. You shouldn't be one-dimensional in your approach, I think, is the message I really want to get out there. I think when you have an understanding of the way markets move, when the stock market's going up, it's easy. It's the easiest thing in the world to just, make a bit of money. But when the market is declining and moving sideways and presenting problems, you need to understand and observe where you should be looking to trade. Let price tell you. Don't keep going back to the same old stock and trading it time and time again, because you're just at a massive disadvantage. The easiest way that I like to communicate it is, you'll never beat Wall Street. You can never beat it. But if you can learn to be its friend a little bit, and what that essentially means is, you just go along with Wall Street, you just figure out where the money's going and you just keep following it. It sounds easy, I understand that. And I understand that, again, not many of you can obviously have the time to do what I do, but obviously that's what makes me incredibly unique. So, absolutely, this week, TLT, a lot of my guys' profit target met this profit target dated back to July 2016. So, this is job well done. So, you cannot do any more on that trade. TLT has probably run its course for the time being. So you just say thank you very much. Let's see what happens on Monday. Let's see where the money is moving on Monday. Caterpillar's another one. Now, let me just remove that. Caterpillar, obviously, very, very clear support level in place here. We are currently testing that support level. Now, what we know about price is we're in a very definite downtrend at the moment. There is a case to be made that there's chart patterns forming. I get it. However, what you do need to be mindful of are the key support and resistance levels for this particular stock. Now, I would suggest to you that if CAT drops below this level and perhaps hits 115, I suspect that you're going to get quite a lot of selling pressure coming in. Now, when I get asked about this one, more often than not, it's guys or girls that have been in CAT for this big, huge move to the upside. Now, this is a stock that I done very, very well on a couple of years ago, and I like it as well. But I think the philosophy that I have is, I'm only dating these stocks. I'm not married to them. I'm just renting them for a little while. And I think when you understand that, you should only be in a stock for as long as it's paying you. If you're one of these guys that's held and held and held, and you've not really got any exit strategy, I would suggest that you've wasted 18 months in this trade, where there are other areas of the market where you could have allocated your risk and, generated incredible returns. So, the only case to be made, and I haven't even looked at the fundamentals to see what dividends might look like, for example. I've got no clue. That could be the only counter that I can think of, or justification for holding this stock. If you hopefully you get a bounce to the upside and it breaks through, and it's off to the races. But for those of you in CAT, be very, very careful, because we know the more times that support is tested or resistance is tested, eventually something gives. So yeah, very much cautious hat at the moment for CAT. Somebody reached out asking about ABBV at the moment and what my thoughts were. It's obviously massive downtrend. That's what price is telling us at the moment. Huge downtrend. There is a case to be made at the moment that we're about to see a bit of a bounce to the upside. It's not a trade that I would look to take personally, because quite often with these bounces. They can be quite often short-lived, and they're not necessarily indicative of a rally and a brand new trend to the upside. So whoever it was that was asking about ABBV, good luck to you. But it's not a trade that I would take. But there is a case to be made that you're likely to see some kind of bounce at the moment, just like we got here. But the trend is most definitely down at the moment. Okay, ALGN, very similar to CAT actually. We've got a very clear support level in place. One of two things is going to happen here. We're going to get a break to the downside followed by a deterioration, or we're going to get a bounce to the upside with massive strength. Now, we're in obviously a bearish environment, I think would be the best way to say this with the LGN. Not all discounts are created equal. Just because it's been $400 in the past doesn't mean it's going to go back to $400 in the future. So again, those of you that are looking for past performance as a predictor for future performance, I would suggest that you might want to rethink that strategy. So just be mindful of what's happening here. I think if you get a break below this level, below 180, I think it's bombs away, and good night for quite some time for ALGN. Twitter, I think Twitter is logical here. I think above this 42.60 level, I think there's a clear 12% upside before it meets resistance. I think for me personally, that's obviously more of a swing style trade. It's not really the game that I like to play, although I obviously do teach elements of swing trading. My bread and butter is very much trend following. So yeah, Twitter's interesting, to quite a lot of you. Lots of emails and messages over the last few weeks about this. Hopefully the chart kind of explains my thoughts there. Viva Systems, again, very similar to Twilio actually. We've just got this very clear support level, and we're looking for a move to the upside. Obviously, optimal entry has been missed at the moment, but if you are somebody that's perhaps in the trade at the moment, I think it's very, very logical that you can maybe expect it to go back to around 175 and absolutely, be bullish above this level. So I think if it drops below maybe even around 153, 150, I think you might want to just say, thank you very much. But, at the moment, I think you can be bullish on Viva. Comcast support level. Again, this is one that one or two of my guys have got positions in. Meets all risk to reward propositions. So clear support level, you move, off you go. Swing style trade, very easy. So the expectation with Comcast is that this moves back towards 45. But I think with the way the market is at the moment, you can expect it to be a bit choppy before it gets there. And obviously, if the market has a complete meltdown, it's perfectly acceptable to just remove risk from the table, remove your profits, protect capital, and just move forward. Amazon, similar, very clear risk to reward proposition. Again, market plays ball. I think this probably moves back to just above $2,000. Cisco, again, trading range, guys. Support, you move, you let it run. And, the expectation again is, with a range like that, 13.5% probably meets the risk to reward propositions. But, do your own due diligence. Now, I highlighted AWK last week, and my exact words were, look, if the market continues to be a bit volatile, you can expect AWK to break out. Now, as it transpired, my comment came in around here, and lo and behold, American Waterworks has broken out. That's not a fluke. It's not a guess. It's just having an understanding of what happens when the stock market declines. That's why what I do is so useful to my client base. I just have an understanding. I can't really put it any other way than that. So how far it goes, I think, will be very much dependent on the overall market. But having a look at how far it's gone this year, up 40%. That's not too bad. So absolutely, if AWK is not on your radar, it probably should be a good place to look in a volatile market. And there we are. That's us gone, I suppose, full circle on all the charts. Now, I did say to you at the start that if you are somebody that struggles a little bit, you can maybe hang around for a couple of minutes. But I think first thing, if you enjoyed that, feel free to subscribe to our channel. Got some really cool things coming up. Do try to upload maybe once or twice a week. I had a little bit of an experiment there where I was uploading every day for a week just to see how that impacted viewing figures and so forth, but I just don't have the time to do that on a consistent basis. So if you enjoyed it, please do subscribe. Let me know what charts you feel like should be on the radar for next week as well. If you're somebody that's thinking, what the hell was that? Like I said at the start, I'm Sam, and I'm currently working my way towards my CMT designation at the moment. And I also run honeystocks.com trading school, super popular, mega popular website. And, I think we're in 21, 22 countries now, growing all the time. So if you are somebody that maybe struggles a little bit, I think the first thing to say is I can't really help everyone. I think these are generally, when I break it down, the type of people that I can help. And, maybe if you've got a career or a business, maybe you're trying to fit trading around that. Maybe if you want to get away from day trading, if you want better consistency, maybe you want to learn and not just follow other people. Those of you that are maybe looking to trade with minimal stress and you want to align with a successful group, be part of the research that I provide. And I think the simple thing is if you want more time to enjoy life, I think, I can probably help in some way. And I think when you can ask yourself, how good would it be if you were able to build a trading plan and had a rule set for your rest of your life, that has a huge impact as well. Now, unlike every other trading group or trading education company, I'm very, very different because I publish every single trade idea that I post to my client group on my website for complete transparency. So anybody that wants to come in, you can go and have a look and see if the charts, the entries all meet your requirements. I've got a very quality over quantity approach. I'm not posting 10 charts a day. I maybe post 1 to 3 charts maximum in any given week. But 2019 is there. 2018 was completely logged all on my website, and that conforms to obviously my ethics that I need to follow by being part of the CMT association as a member. So if you are somebody out there that's maybe learning from losses, I understand that it does take a couple of years, and during that time you're going to be accumulating losses and paying for your education in that way. You might also be trying to pick up tips from YouTube. You might be watching this because it's giving you the next big chart, or it's trying to mask some of the problems that you might be having with your trading. I understand it's very difficult because I think when I observe the people that I've spoken to, certainly over the last 2 years, those that I have educated in London and worked with on a one-to-one basis and so forth, I know what the story looks like. You're going to be reading lots of books as well. And eventually you're just going to say that to the market. And that's the frustrating thing. It really doesn't have to be that way. We genuinely believe in making a difference at honeystocks.com. You can go onto our website, you can check out all our testimonials. They're all legitimate people that are all part of my incredible trading group. That's the first thing I have to say. I have a beautiful community full of beautiful people, and they're just really, really successful. And the question you probably need to ask is, do you want to keep doing it the old way, or do you maybe want to learn a new way? If you are somebody that wants to maybe learn a new way, very, very straightforward. You can just jump onto our website, honeystocks.com. Just click on apply or join and fill out your details. Just let me know what you struggle with. I genuinely love to help people. I've had hundreds of conversations with people, traders, disillusioned all over the world at this point. A lot of the time, I can actually help on the phone call. I'm not going to try and push anything down your throat. I'll present you with a couple of options. If you feel like it's a good fit for you and my style is a good fit, my research is a good fit, we can have that conversation. But just let me know what you struggle with. It saves time on the call. I have opened up my calendar for the next 3 days. So feel free to jump on and just pick a time. Like I said, I've had hundreds of conversations at this point. So I just genuinely love talking to people all over the world and helping in any way I can. So if you've stuck around to the end, thank you very much for watching, and I'll maybe speak to you soon. Thanks for watching.